Collateral pressure. Mexico in the shadow of the U.S.-Venezuela confrontation. Looking toward 2026, Mexico will face mounting pressure to adopt a more proactive diplomatic posture and limited extraterritorial security engagement. This shift is structural rather than ideological. U.S. policy, as outlined in the National Security Strategy, NSS, increasingly links trade access, financial connectivity, migration management, and sanctions compliance to security cooperation beyond national borders. In this context, Mexico's strategy of diplomatic retrenchment and selective disengagement, implemented in 2018 under President Andrés Manuel López Obrador, has become progressively costlier. While it initially reduced short-term political exposure, it also weakened Mexico's ability to influence emerging regional security and trade rules, increasing the likelihood that external enforcement measures will affect Mexico without its direct input. Energy dynamics and trade. The escalation of U.S.-Venezuela tensions is reshaping energy flows in the Western Hemisphere, placing Mexico at a strategic but exposed crossroads. Sanctions, cargo seizures, and maritime interdictions are tightening supplies of Venezuelan heavy sour crude, a key input for Gulf of Mexico refineries, increasing price volatility and the value of alternative crude sources and blending options. Mexico, through Pemex and private traders, may gain limited leverage by offering substitute blends or incremental exports, but the risks are significant. U.S. and allied regulators are intensifying scrutiny of crude traceability and compliance to block indirect Venezuelan barrels, exposing Mexican firms to potential secondary sanctions, reputational damage, and market restrictions. Refiners and traders now face stricter origin certification, anti-money laundering, AML/Know Your Customer, KYC, controls, and audits, while increased inspections raise insurance and logistics costs. Migration and domestic pressure. The intensification of the U.S.-Venezuela conflict is increasing migration flows across the Americas, with Mexico consolidating its role as the main transit corridor to the United States. Venezuela's prolonged crisis adds to ongoing migration from Central America and the Caribbean. While Venezuelans are not the largest migrant group in Mexico, they are among the fastest growing in transit and asylum claims, especially in southern Mexico and key northern border cities. As flows rise, Mexico faces mounting humanitarian, administrative, and fiscal pressures. Shelters and local governments are strained, while federal authorities must balance humanitarian duties with border enforcement and negotiations with Washington over returns and parole programs. U.S. cooperation is likely to hinge on tighter controls along Mexico's southern borders, increasing enforcement costs and political tension, particularly in northern cities such as Tijuana, Ciudad Juárez, and Reynosa. Migration also pressures housing, healthcare, and public services, expands the informal economy, and heightens vulnerability to criminal recruitment. Without structured labor integration and shared burden mechanisms, these pressures risk deepening institutional stress and social instability. Organized crime shifts. The disruption of Caribbean maritime routes is accelerating criminal adaptation, with Mexico becoming a central node. Direct sea shipments of cocaine from Venezuela to Mexico or the United States account for only a small share of total flows, about 1 to 3%, rarely above 5%, while the main routes remain overland through Central America and along the Pacific from South America. As a result, increased interdictions are unlikely to reduce supply and instead drive tactical displacement. Mexican criminal organizations are redirecting cocaine through Colombia's Pacific coast and Ecuador, while synthetic drug precursors continue to move through Central America by land and short sea routes. To maintain flexibility, networks rely more on microports, clandestine airstrips, and rural logistics hubs, complicating enforcement. Diversification into illegal mining, fuel theft and smuggling, customs fraud, and extortion predates recent U.S. actions but will undoubtedly become optional income providers for drug cartels. These groups also use financial schemes, fintech misuse, trade-based money laundering, shell companies, and illicit factoring to hide illicit flows within legal trade under increasing enforcement pressure. Hemispheric polarization and institutional stress. The widening rift between the United States and Venezuela is reshaping regional dynamics, but the pattern remains pragmatic rather than bloc-like. As Washington tightens sanctions and diplomatic pressure, Caracas relies most consistently on political and diplomatic backing from Cuba and Nicaragua, both of which have issued explicit, repeated public statements recognizing and defending Nicolas Maduro as Venezuela's legitimate president and denouncing U.S. sanctions as unlawful or interventionist. Beyond this core, Venezuela maintains selective and transactional relationships with extra-hemispheric actors, but these fall short of a formal alliance structure. Russia has not issued recent, high-profile official declarations explicitly defending Maduro in ideological or political terms. Instead, Moscow's posture has been cautious and interest-driven, focused on protecting legacy energy, military, and financial exposure. China similarly recognizes Maduro's government diplomatically, but has largely avoided public political advocacy, emphasizing sovereignty and non-interference while reducing its financial exposure. Iran's engagement follows a comparable pattern. Overall, Venezuela's external support network is fragmented and opportunistic, enabling ad hoc workarounds to sanctions but not constituting a cohesive counterblock to U.S. influence. Threat assessment. Overall, Mexico faces a moderate to high, multi-domain risk environment driven less by direct interaction with Venezuela than by U.S. extraterritorial enforcement, sanctions compliance pressure, and the securitization of trade, energy, and migration. The core threat is institutional stress. Failures in crude traceability, port controls, or AML/KYC compliance could trigger secondary sanctions, reputational damage, higher financing costs, and trade disruptions. Energy trading, maritime logistics, Gulf and Caribbean ports, and commodity-linked financial institutions are the most exposed nodes.